Dr. O. We're recording this on Friday, April 4th. I have just returned from the bunker and taken my helmet off. We are going to talk about the stock market in our next episode, and I promise that it'll still be great when people get to hear it early next week. So we'll be measured on that. As far as the week ahead goes, a couple of important indicators are coming out. The consumer price index will roll out, and we'll also get the producer price index. What are you anticipating?
So we had some cooling in February, and so I think inflation came in slightly lower at 0.2% on a month, down from 0.47% the month before. On a year-over-year basis, headline inflation was at 2.8%, down slightly from 3%. So it was good. The February CPI report was pretty good. You continue to see downward pressure coming from the housing market, rent growth continuing to ease, although I don't know how long that's going to last, given the pullback in new construction, in housing starts in the past year or so. So there might be some pressure on the rent side. At the same time, right, we got jobs still pretty decent, pretty solid. So we got solid jobs. Consumers are still spending somewhat. You're okay. Now, with that said, this was before the tariff shock, right? And so
Yes.
with the tariff shock, right, we're looking at data. The March data is again going to be a look in the rearview mirror. It's not going to reflect any of the latest and greatest. No, and we'll talk about the stock market impact, the wealth effect on consumer spending in another show. But yeah, so CPI, I think pretty good in March. I'm thinking CPI might even have accelerated slightly. Inflation might have accelerated slightly in March. And the reason I say that is, ahead of what the administration called Liberation Day, people went out and spent on those big items, those items that they thought, if you expect prices to increase in the future, you go in and buy them, you buy things when they're still somewhat cheaper, right?
Well, are you seeing that in the data, or could this be just as simple as, we're in the middle of tax return season. People got a lot of people got their tax returns back. They've got a little bit of money on hand that they may not otherwise have had. And
I don't believe in that. I disagree with that thesis. And the reason I say that is,
well, it's not really a thesis. I'm simply asking about sort of the kind of the undertow of the
savings
economy.
rate the savings rate is rising, right?
Okay.
3.6% to 4.3, 4.4%, right? Consumer confidence has plunged. Last time I checked, I don't think people are going out to spend because they necessarily feel better, feel wealthier, and happier about where they are. I think the labor market's holding up pretty well, but I think that, you may get kind of a last hurrah from the consumer ahead of tariffs. And I think we've seen that in the jobs report even. I don't think employers have all of a sudden decided we're going to start going on a hiring spree, and start hiring a bunch of people, ahead of what they thought could be a massive shock. And so yeah, look, I think we're probably going to see CPI accelerate slightly just because, and we know that basically large companies were basically preparing for tariffs. And ahead of the tariffs, we saw a bunch of spending activity, but again, that's it's already cooling off. You could see it in the trade deficit data that just came out. That's already cooled off. You had a big increase in the trade deficit, lots and lots of imports ahead of tariffs. And then all of a sudden, you're now seeing that cool down somewhat because, people are like, okay, tariffs are here.
Yeah.
So we might see a little uptick in March. I don't know how strong that's going to be. But I expect that to drop off again, in the following month. Now, if you look at forecasts from different shops, research shops, what you see is everybody's expecting retaliation.
There's already news in the market in the past couple of days that retaliation is on its way.
Exactly. And if you get retaliation, of course, you're going to get, upward pressure on prices. Right. And that's why the Fed forecast is looks at inflation, the PCE, not the CPI, but the two are probably going to move in the same direction. And most forecasts, I looked at Apollo's forecast today, they're all pointing up, inflation higher, growth lower. And, basically, the stagflationary winds that we talked about in the center square. So that's exactly how this is likely to play out. Again, it's a major experiment, and I'm looking forward to being able to study the results, to study the experiment and learn from the results.
Yeah. And just quickly, as far as PPI, I mean, you imagine that we're probably one report away from seeing any of the actual impacts, certainly, of the last couple of weeks, the run up to tariffs and the actual implementation of tariffs.
I think that's what I'm saying is that you're probably going to see a little bit of that already.
Okay.
In a sense that, businesses went out and, spent more.
Right.
You're stockpiling before prices increase.
Mm-hmm.
Right. And so you might see a little acceleration. Now the big question is, will that drop off, or will this trade war intensify and cause prices to keep rising, right? And price growth to accelerate, further. I think that's the big question. And we're going to see that, in April and May, inflation reports. For now, we're still at March. And for now, I see a small uptick in price growth, in this report. You saw it already in the ISM services and ISM manufacturing. Prices paid component of those surveys, showed an uptick. And so I think that's probably what we're going to see in the CPI report, next week.